Hi everyone and welcome to the Weekly Spread, the show designed for middle-class Americans who wanted to grow their financial IQ and put their money to work. My name is Marcus and every week I'll break down one powerful options trade step by step so you can generate consistent income with less risk and less stress. I built this channel for busy people with families, full-time jobs, not a lot of free time. This isn't about hype and gambling. This is about us having a side income strategy that we can use to cover a car payment, a mortgage payment, or buy back freedom. So if you want to join me on this journey and master simple, repeatable trades that work, make sure to like and subscribe. Let's get into it. Guys, every week I am looking for high probability vertical spread on the S&P 500 using SPY or XSP. What is a vertical spread? It is when we sell one option and buy another option at a different strike price, but on the same expiration date. It's a strategy designed to profit even when we're mostly right. The real advantage, define risk, define reward, and time decay is working for us. Here's why the vertical spread is perfect for beginners. Time decay helps us. Unlike buying options, which lose value every day, our spread gains value over time if the market behaves. Second, we have defined risk and defined reward. And finally, highly profitable. So we aim for 60 to 85% win rates. It's all about stacking the odds in your favor using delta, charts, and smart risk control. Let's break down our first official trade. You can see I'm in it right here. I'm using the Thinkorswim platform here, and we're going to select a vertical on XSP. And we're going to do one contract each, expiring on July 8th. And we're going to do a sell put at 624, and we're going to do a buy put at 622. This should give us roughly a max loss of $86 and potential win of 114. Our break-even number is $622.86, and we're looking at roughly a 57% win rate here. What does this all mean? So as long as SPY stays above $624, we get to keep the full 114 credit. And even if it drops slightly, we're still in profit, unless it closes below the 622.86 by expiration. You might be asking yourself why we picked this trade. Well, SPY recently bounced off a key support zone around $618, $620. Volatility is relatively low, which helps us collect more credit safely. And we have a 6-day expiration, meaning it's short and focused. We're taking advantage of the calm market, positioning ourselves for high probability win. Team, now what's our exit plan? We never enter a trade without knowing when we'll get out. It's our profit target. Take profits early. If we earn 70 to 80% of the credit, that's about $80 to $90, we'll take profit. Stop loss. We cut the trade if the spread value hits $1.75 to $2. That limits our loss to around $60 to $80. And then no emotions. We reset and move on to next week's setup. What do we watch for the $618 to $620? If it breaks below $615, that could trigger more downside, and we'll need to manage our trade. Keep an eye on the Fed commentary and job data that could induce volatility. Look at this. This isn't some get-rich-quick strategy. It's a consistent one. If you do this right, one trade per week could generate $4,000 to $6,000 per year on a $15,000 account. That's 30 to 40% return with minimal stress, minimal time, and full transparency. And if you're following NASDAQ 100, or 8 to 10, 12% is really good. So in closing, this strategy makes sense. If this strategy makes sense to you and you want to see how we do over the year and follow us in our trajectory, hit the like and subscribe button, and I'll walk you through a new trade every week. And if you want to get a hold of our free spreadsheet we use to track everything, drop a comment below with the word join and I'll send that over. Thanks for watching the Weekly Spread. I'm Marcus, and I'll see you Sunday night for our next trade. Thanks so much, team.